Hi, good evening, friends. Today I'll explain you about stock picking basing on fundamentals. Stock picking can be done either through technical or fundamental, but most of us select stocks or invest in stocks for trading or for long term, basing on the information from either friends or on basing on some news, which is not correct. Basically 90% of the people does this itself. So this is not the correct. So I'll explain you certain parameters how to check it. At least once you receive any information or any news on that, you can do your first level of analysis and then take a decision on whether to invest on that particular stock or not. Again, I'll tell you, stock market investing is again subject to risk, where fundamental analysis and technical analysis are completely different. Technical analysis has got a lot of other influencing factors, but fundamental analysis is basing on the facts, on exact facts of a company. Basing on that, you will be taking a decision. So I, especially for the people who does long term investing, for them this will be very beneficial and very useful. I've learned this investing techniques from my mentor, Mr. Yogeshwar Vasist. Fine. So now we'll start into that. So for that, first we would require this site called screener.in. This is a free website. Anybody can use it. Once it is there, you need to log in. I already have my ID created, so I'll directly log in into it. And once I log in, I'll select any company. Let's say I'll select a famous company called Reliance. So once I select this Reliance Industries, you can see the parameters which is shown there: market cap, current price, book value, ROE, rate of earnings, EPS. But we would require some more parameters for this to analyze. So first thing which we would require is you can add ratios in the side base in this from this add ratio column. You should have debt to equity ratio. So you can see that it's already displayed now. Then we'll have interest interest coverage ratio. This also you can see now it's added. Then I'll have oper, operating profit margin for 5 years. This also you can check, this is added. Then I'll have peg ratio. Peg ratio is price to earnings ratio. This, if we need an explanation, this itself will take a lot of time and will probably require another session. So as of now, I'll keep it simple. Just consider it as a peg ratio. Then for some sites, you would even be helpful to have a promoter holding. So now we have added all the required parameters in this site. So first, to start with analysis or analyzing any stock, we would see the market cap. If any market cap of any stock is greater than 1000 crores is called as large cap, less than 1000 crores is called mid cap and small cap. I would suggest always to go for the large cap companies only, so that there is a volume and the scope of manipulation or speculation done by brokers will be very less. So now, after we see the market cap, you can see the current price and book value. And always you see market price by book value. If it is greater than 5, it is overvalued, and if it is less than 2, it is undervalued. You can see here current price 1580, so you take 1600, approximately 1600 by 700. So approximately this is around 2 point something. So this is comes under the fair value. So basing on the current price and book value, it is Reliance Industries is now trading at a fair value only. It's a good value. I mean, a decent price as per its valuation. Now then, we'll see about the other factors. Operator profit margin of 5 years is 4.535, but return of earnings is 11.65. This is also good. Market is expecting 11.65% of returns, and from the last 5 years, it is delivering 14.35%. Then we have to see interest coverage ratio. Interest coverage ratio is a matter of concern here. Interest coverage ratio is something like the ability of a company to pay for the interest for the amount borrowed. This should be at least a minimum of 12 months minimum. And also debt to equity should be as much less as possible. I prefer it's zero point 0.0, but depending on the company it varies. But here also debt to equity is also slightly concerning. So the concerning factors are debt to equity and interest coverage ratio. But return on market expectations, and market price to book value is also fine. Now coming to the other important parameter called peg ratio. Peg ratio, you can see a peg ratio always, less than 1 is called undervalue, greater than 2 is considered as overvalued. So if it is here, it is 1.8, so it is a normal price, we call a fair price. Then other thing which you have to say is promoter holding. 50% is always considered as a decent, good, very decent compared to the market cap of the stock. Most of the companies will have promoter holding less. That companies, you have to need to have an evaluation done thoroughly. Suppose if we take a company called Infosys, the market or promoter holding will be somewhere around 13 to 14%, if I'm not wrong. But that company is again run by a very professionals. So in that type of scenarios, you can be ignore that promoter holdings. But other scenarios where for some companies you need to have to consider this promoter holdings. And even coming to the debt to equity ratio also, and interest coverage ratio, this depending on the industries also you have to get compared, like, so, especially related to real estate companies and aviation industries, this will be very high. So in such scenarios, you have to compare the stocks with peer stocks in that industry and take a decision. Then we'll move to the same side, downwards, where you can see quarterly results, profit and loss, comparative figures in rupees crores. So in this, you take the last one, EPS. EPS, it is 60. Ignore, don't consider the last. Leave three. 1, 2, 3. So it is 40. It increased from 46.34 to 60. So this is approximately around more than 20%. So market here, as per the fundamentals or as per the information we have, market is expecting 11.65%, but we have grown at, the Reliance stock has delivered around 20% of the growth in the EPS section. So this is considered as a very good stock for the investment right now. For an example, I will show you even the other companies which, okay, I'll take the Infosys which I've already referred so that it might help you. Okay, I'll take Infosys. So basing on our analysis, market cap is large cap, which fits our criteria. Then we have current price by book value is approximately around 150 by somewhere around 4.5. If it's greater than 5, it is considered as overvalued. So as of now, it's in the important stage of getting overvalued. Then we have peg ratio. As I said, peg ratio, anything greater than 2 is overvalued. So this Infosys as of now is considered as overvalued. Interest coverage ratio is absolutely good, 129.38. Debt to equity ratio is even more good, it's 0.07. It's almost like near to no debt at all. And operating profit margin of last 5 years met the market expectations on the stock. Now we'll see the EPS. EPS, I'm saying profit and loss consolidated figures of the last 3 years. So you go into this EPS section, 39, leave 1, 2, 3, 26. So it grown from 26 to 39. That is almost like 50%, right? Yes. So this has given a very good returns, or more returns than what market is expecting. So all these factors are good except the peg ratio. Since peg ratio is greater than 2, I think it's always need to be cautious on this stock before taking any decision. Hope this analysis will help you out to in selecting the stocks for your investing or for trading. Right? Please like if you feel this particular video is helpful, and help me to get more subscriptions.